Hi guys, welcome back to Money Monday. So I thought something different. I would film this video on Heron Island. Now Heron Island is just off the coast of Gladstone in Queensland. And at the moment they're just coming into nesting season for turtles. And I've been snorkeling and I've been swimming with sharks, stingrays and of course turtles, and this place is absolutely beautiful. But I will be doing a review of the hotel and island on the Sugar Mama website, so make sure you click on the link below in the description box to have a read of what I've been up to. For this video I wanted to explain to you how to start building your first share portfolio. Hopefully your knowledge has been building around shares and you've had that aha moment where you realize you are perfectly capable and can achieve building your own investment portfolio of shares and starting to build long-term passive income streams. And whilst I don't believe you should invest until you are 100% comfortable and understand all the risks and can understand the value of what you're doing and the sacrifices that you're making to achieve this goal, it's really important that you understand the steps. So this video is how to build up your share portfolio. Number one is cash. You need to have some initial money that you are prepared to invest. Now this money, you need to understand that it's invested for the long run. So if you need that particular amount of money for any short-term or even medium-term expenses such as holidays, deposits on homes, new cars, do not invest that money. Set up a separate savings account with that money purely for the intention of investing for the long run. Now my definition of investing for the long run is 10 years or more, and to be really honest, when I invest I never intended ever selling that share, because why would I want to cut off my long-term passive income stream? Now your first question may be, well, how much money do I need to invest? In Australia you can buy shares with as little as $500, and that's $500 per trade. So say for example you were buying stock in company XYZ, the minimum you could invest in that company is $500. Now the FPA recommend that a properly diversified portfolio has around about or minimum of 20 stocks. So that would mean you'd need about $10,000 to start off with. However, I'm not very comfortable with investing $500 into one company because you've got to pay brokerage, and that really eats into your initial capital, because brokerage, especially online brokerage, can be about $25 to $30 depending on which online broker you use. Personally, I prefer to invest a minimum of $1,000 at a time. So if you have $10,000 saved up, which you're prepared to invest for the long run and you don't need that money, well then you would buy and invest in 10 different stocks at $1,000 each. Step number two is open up a share trading account. Now there are two ways to do this. You can use an online broker, and most banks offer an online trading facility. Or the other option is you find your own personal stockbroker who can help buy those stocks for you, and also can sometimes even put together some recommendations as to what stocks you should buy. Again, I will link in the description box a couple of the companies I've heard that are great stockbrokers. Step three, and that's after you've opened up your share trading account, and that is to transfer the money into your new stockbroking account or share trading account. Now this is really important because you cannot settle your shares without that money being in your account. So when you are ready and the account is open, transfer that money across, because that is your initial seed capital to start kickstart building your share portfolio. Step 4 is probably more for an online share trading account, and that is to watch the tutorials. Make sure you understand exactly how to buy and sell shares. Make sure you watch all the online tutorials, even if it means calling up the 1-800 numbers and understanding exactly how to place your first trade. You do not want to get it wrong. You want to make sure you do it correctly and it goes through and settles within the time frame that you're supposed to. Tip number 5 is diversify. Now just going back to tip number 2 for a split second, where I spoke about investing in a number of different stocks but also being mindful of the cost of brokerage. It is so important that when you invest across a range of different companies and across a range of different sectors. I do not recommend investing all your money in, say, 5 different banking stocks. You need to make sure your portfolio covers a whole range of different industries and companies and sectors, because the share market and certain industries do not perform in uniform. That is to say, the performance is not in sync. Certain sectors will do extremely well while others may go through tough times and suffer. And this is sometimes where you can identify potential buying opportunities. So everything is pretty exciting. But the important message I'm trying to explain here is when you diversify, you reduce your investment risk. Now you can over diversify, which I call de-worsify, because you can go too far down the extreme where you have too many stocks and too many different companies in your portfolio, and it really can erode into the returns and basically just give you a very average return. So ideally, personally, from my opinion, I like to invest between 15 and 25 different stocks depending on the size of your portfolio. However, I understand that when you start off investing, you only may have a small amount of money, so you can only potentially afford to invest in, say, 3 or 4 different stocks. Now, whilst that is quite risky, I understand that you may be really keen about investing, and I would actually recommend that as you either wait and save up a little bit more money before you start investing, or if you do, or you're really eager and you want to invest that money as soon as possible, invest it then, but then make sure that you continue on saving up more money and adding more money to the portfolio into different sectors and different stocks, so that you are diversifying your portfolio as quickly as you possibly can while still being invested in the market. Step number 5 is paperwork. Once you have bought your first portfolio of stocks, you will get a whole pile of paperwork in the mail, and I'm assuming obviously you're in Australia. Now, this will confirm how many stocks you purchased and at what price. Now, there's a lot of forms that you actually need to complete and send back, and it is really important that you take the time to either log onto your account and complete that information, or fill out the paperwork and post it back to them. Now, questions they ask you are, they have your address already through your share trading account, but they need your tax file number. Otherwise, you risk them applying the top marginal tax rate to your dividend payments, and that can be really annoying because, again, it can eat into your returns and you don't get that money back until you lodge your tax return. The next thing is bank details. You need to make sure you provide your bank details, otherwise you're going to be receiving your dividends, assuming you haven't recommended they've been reinvested, you'll be receiving them as checks. And I can tell you, every now and again I get a check, and it's so annoying because it means I have to waste time going to the bank and depositing it. I much prefer my dividends, when they're not being reinvested, to be deposited straight into my personal account so that I can keep track of them and obviously then manually add them back into the investment portfolio. And then the final step when it comes to paperwork is, where possible, reinvest your dividends. Now, that involves ticking a box or crossing a particular box that says full dividend reinvestment or partial dividend reinvestment. Full dividend reinvestment means all dividends from that particular stock will be reinvested back into the company and increase your number of units in that company, rather than being paid out to you as cash through a dividend. Now, I personally always, and for the $1,000 project portfolio, always reinvest those those dividends where possible. However, unfortunately, not all companies offer automatic dividend reinvestment plans, and in that case, that is why you have to give them your bank details. The other option is a partial dividend reinvestment, and that is where you get to choose a percentage of those stocks being reinvested or paid as cash. So, for example, you could have 50% of the dividend reinvested back into the company and 50% paid to you as cash. It really comes down to your personal situation and your cash flow needs. I know for myself, I live off my salary, so I don't need that money, so I can afford to reinvest it for future compounding growth opportunities. But for some people, that's not possible. They need that money, or they want that money to do other things or help fund their own lifestyle. The good thing is, though, you can change your dividend reinvestment instructions at any stage, so don't feel like you have to commit to a certain decision for the long run. It's very easy to change, and you can change it backwards and forwards as much as you like. Step number 7 is review your portfolio. Now, I do not recommend any of my clients or anyone out there checks their portfolio on a daily basis or even a weekly basis, because the share market, as I have explained numerous times, is incredibly volatile. If you see the value of your money bouncing around on a day-to-day basis, minute by minute, it's going to cause an emotional trigger within you, and you may make a bad decision, like selling all the stocks and getting out of the market, when it doesn't actually meet your long-term goals of building wealth. So I recommend checking your portfolio once a month or once even every couple of months, and what you really need to be focusing on is, what is that portfolio paying you as an income? It doesn't matter what the capital value of that portfolio is, because you're investing for the long run. Those short to medium term fluctuations are really irrelevant, and in fact, as I said before, they present potentially long-term buying opportunities where you can potentially pick up more stock in that company at a better price. Now, as part of the reviewing process, I also recommend that you set new goals. When we have goals, we have more meaning to our life. So when you're looking at your portfolio, also look at your cash flow and see what other opportunities exist within you or around you to potentially add more to that portfolio and see it continue to grow and flourish. Set timeframes for those goals with particular dates. For example, don't just set a goal in 3 months' time, I want to have added $10,000 to my portfolio. Say to yourself, by the 1st of March 2017, I want to have added $10,000 more to my share portfolio. Try and be as specific as possible. will make you more accountable and more likely to achieve success. And last tip for building your share portfolio, and that is to add to the portfolio when you can. Always look for opportunities in your cash flow where you can add a little bit of money to the portfolio. It doesn't matter how small or how big it is. You're creating a really powerful habit system that's going to make a huge impact in your financial future. And I promise you, you will never look back. And every time you add more money to your share trading account and buy more shares for your investment portfolio, get excited, because you know that you are on the right path to building long-term, realistic financial freedom and luxury. Now, if you haven't already, please make sure you subscribe. I'm actually doing a whole new range of much more detailed, in-depth videos around investing in shares, and this applies to anyone and everyone, no matter where you are in the world. So get ready for your knowledge and understanding and education around investing to explode. I can't wait to share these videos with you. They are seriously inspiring and seriously motivating. I will see you next week on either Money Monday or Lifestyle Love, and make sure you check out my Instagram account, because I'm going to be showing you how beautiful this place is. And don't forget to check out the Sugar Mama website for the verdict on Heron Island and if I think it's worth coming here. Ciao for now. Bye.